Did you know that over the last 50 years, 78% of the total returns of the S&P had come from reinvested dividends, not from stock price increases?
Wow. Every day you hear about stock prices going up and down, but you don't hear about dividends. Why?
Beats me, right? Because dividends really should be one of your focal points. But today we're going to change that. We'll be discussing what a stock dividend is and why it's newsworthy and definitely deserves your attention. Stay tuned.
What's up? I'm Nadia.
And I'm Nicole,
Bringing you another installment of the Wealth Twins Show,
where we teach you how to invest, save, and manage your money on a road to financial independence.
And what does that mean, Nicole?
You know what it means, Nadia. It means we're teaching you how to fire your boss.
Yep. It's our mission to teach you how to take control of your money. So if you're new here, make sure you subscribe and hit the notification bell right after. We're making these videos on a weekly basis and we put them out every Tuesday.
And we don't want you to miss them.
Yep. So let's get it. Let's talk about these stock dividends.
All right. So stock dividend. What exactly is a dividend? Well, before we get into that, I need you to understand why do you invest in the first place? And how, when you invest in a company, how that then translates into receiving a dividend. Okay? Now, when you decide to buy a stock, you're actually deciding to buy, you found a company that you like so much and you want to give this company your money because you believe they have the ability to make you more money.
Yeah, it's called investing, right? So when you find this company, you have to make sure that you keep your goal in mind. If your goal is to keep your money safe, then you should put it in a savings account. If you want to gamble with your money, then go to Las Vegas. You'll have a better time there.
I know I had some good times in Vegas, not much in the casino because I would have had better time giving that to charity. But anyway, now there are two ways to make money in the stock market, right? You either sell at a price higher than what you bought it at, or you hold on to the stock and you receive cash payments from the company on a scheduled basis.
Yeah, these cash payments you receive on a scheduled basis are called dividends. As an investor, receiving dividends just for holding an investment is called generating passive income. If you want to know more about how you can generate passive income using dividend investing, why don't you check out our dividend investing video for passive income.
Now, how exactly does a company come up with the money for a dividend?
Yeah.
And how do they decide how much they're going to pay out on a scheduled basis? Now, dividends are paid on a quarterly basis. Most of them are. And how did the company comes up with the amount? Well, a company gives out a dividend when it reaches a stage in its life cycle where it feels comfortable about predicting its future cash flows and the needs for the company in the long term. The company is no longer growing at the rate that it used to, but is still very profitable.
Yeah.
So the company uses a dividend to entice buyers to buy the stock and also to help maintain a good price in the stock market, right? They reserve a portion of their profits for dividends, okay? This portion of profits that they reserve is the portion they believe they can sustain, giving back to shareholders without jeopardizing the future needs of the business, right? Like the future needs could be like pursuing projects to move the business forward, acquisitions, buying new equipment, etc., okay?
If the company does not provide dividends in a sustainable manner by not thinking about the long term, they may have to go back to their investors for more money to pay for these business activities or projects that they need in the future. Even worse, they may have to go ask the government for a bailout to avoid bankruptcy.
Bailouts and asking buyers for more money is no bueno.
Dividends are tied to earnings. This is important to understand, okay? If there are no earnings, there are no dividends. No earnings grow, no dividends grow. But you can't have high earnings without dividends. These companies are continuing to grow and going up, and they need the money to continue their rapid growth. For instance, Amazon, right? They should be paying out a dividend, but they're basically like, nope, we're trying to take over the whole world. We need that guap. We're not paying it out to shareholders at all. Just ride this price wave and be happy with what you get.
Okay, so what Nadia meant by guap means they need your money. Okay, guap.
Anyway, get that guap.
So this lets you know, the Amazon example lets you know that a company can be profitable, but they do not have to give you dividends. But when a profitable company gives you dividends, they need and they tend to keep doing it. Why? Because to investors, dividends are more than just passive income.
Yeah.
Dividends are a way as also a signal that could be used as a tool to evaluate company profitability and consequently the company's stock price. A dividend is an unwritten social contract. If a company gives a dividend, it's a sign that the company is profitable and they expect to be in the long term. If the company decides to cut a dividend or stop paying the dividend for whatever reason, it gives a sign that the company is not doing well and there might be a problem with its earnings, right? That's why if a company cuts its dividend, that company can expect that its share price will go down in the market.
Yeah, and additionally, an investor can use these dividends to decide which stocks to buy and which ones to avoid. It all depends on your goal and your investing strategy, which we also covered in that dividend investing for passive income video. All right?
So, as you can see, dividends are super important. And even though they're not mentioned in the news or, seem to be sexy as, the stock price is going up and down.
Nobody cares about the stock price going up. If you don't sell it, it's paper money.
Yeah, well, but still, when it comes to investing, you need to make dividends one of your focus, okay? Because they are important. They mean something more than just stock pricing.
Yep. And another focus you should have is on your manners. Because as always, we want you to remember, your manners will always take you further than your money.
That's true.
We'll see you in the next video.
See you in the next video, guys.